Hi, and welcome back to the channel. Today, we're talking about car insurance. Again, new car insurance rates on top of the previous coronavirus pandemic-related refunds that we've been seeing. Throughout the past couple months, we saw a lot of car insurance companies giving back refunds or discounts on their premiums as a result of the cost savings that car insurance companies have seen from the reduction in driving, less accidents, less collisions, things like that, because people are staying at home and driving less. And although that first wave of discounts and refunds have passed for the most part, there are some other changes coming to car insurance rates across the country that I think is important to think about and look into. And before we get too deep into it, I just want to go over a quick and easy summary of how car insurance rates are determined. As a consumer, we know that things such as your driving history, your vehicle history, miles driven, location, all of that factors into how much premium you pay for your car insurance. And this will also vary based on the limits and deductible options that you choose. But who sets these rates and how do these rates change? So car insurance companies all have different rates, and they have different goals and targets for different geographies and demographics that they're trying to reach. Some companies may only operate in a limited geographical region. They may be more local, whereas the larger insurance companies, the Geico's, Allstate's, State Farm, Travelers of the world, do business in most every state. And obviously, insurance is a business, so at the end of the day, these companies are out there to make a profit. They use all of the data that they have from their drivers and historical records to try to calculate what is the right amount to charge each individual person so that at the end of the day, they're coming out with a profit. Even though you might only pay $2,000 a year in car insurance premiums, if you get into a bad accident, you total your brand new $100,000 Mercedes, the car insurance company is still making money at the end of the day because most people aren't getting into accidents, most people aren't totaling their cars, and they see a net profit, hopefully, at the end of the day. But the thing is, insurance is a pretty heavily regulated industry in the United States. Car insurance companies can't just set whatever rates they want for the consumers. For example, if I'm Geico, I can't charge you $10,000 a year for insurance because one, this will probably get reviewed by the insurance commission, and two, it is such a competitive industry that if Geico is doing that for me, Allstate can just come in and undercut that price $9,000. Travelers comes in $5,000 up until we get to a reasonable point where those profit calculations are kind of getting a little bit closer. Maybe they're breaking even or losing 50-50, so we've reached a point at the competitive price. And one other thing is that insurance is regulated on a state level. There are some federal insurance programs, but for most consumers, a lot of things vary a lot from state to state. They're usually controlled by a Department of Insurance, Insurance Commission, Department of Financial Services, something like that on a state level to oversee all insurance companies within the state. So two common methods that rates are used. One is the file and use method. Two, prior approval. So file and use, insurance companies file whatever rates that they deem is necessary for that state with the insurance commission, and then they proceed to use those rates. So the insurance department knows exactly what each company is rating their policies on. They know exactly what the rates are. There's no hiding the rates from the regulatory bodies, but the state can come in and review these rates to make sure that they're appropriate and adequate. One, they want to make sure that consumers aren't getting overcharged, so they're not getting ripped off. There's no giant conspiracy by all the insurance companies in each state to jack up the prices. Another goal of the Insurance Commission or Department of Insurance is to ensure that rates aren't too low. They want to make sure that insurance companies stay solvent and that they stick around long enough to be able to pay out claims if they do happen. So if I start my own company, I see that everyone's charging on average $2,000 a year. I come in at $300 dirt cheap rates to get a bunch of new customers, but when they start getting into accidents, the claims start coming in. Well, sorry guys, I didn't charge you enough. I don't have enough money. I'm going bankrupt, can't pay anything off. So that's another thing that they want to prevent, to disincentivize or to make sure that rates aren't set too low for whatever reason so that the consumers are protected. The insurance department can review rates and make sure that they're up to par, they're competitive, they're not too high, make sure everything looks pretty good. The second way, prior approval, is instead of the first way where insurance companies have to file with the state and then they use it, they have to file with the state. The state has to sign off and approve it before those rates can be put into effect and used. So in this case, the state has to review every single filing, all new rate changes, and sign off on it before they can be used. And if you're curious about the rate filings in your state, a lot of data is available on the insurance department or insurance commission financial services website. Just search up your state's auto filings, rate filings, things like that. Should be online. A lot of the states break it down by how many people are affected, average rate changes, maximum rate changes, things like that, so you can get a sense of what's going on in your state. So how this affects us now during the pandemic is we saw insurance carriers giving back discounts and refunds in the past couple months. Some people have said that the discounts haven't been enough. Maybe the insurance companies are holding on to a little bit more than they should be. Geico's already being sued over this, class action filed, alleging that the company hasn't given back enough. But other than that, we see some interesting developments going on in new rate filings by certain insurance carriers. So a couple articles I saw online, State Farm apparently is pushing to lower rates in a couple states. We're looking at Illinois, Georgia, Alabama, and Oregon. Could see a rate decrease of between 12.5% and 13.5%. Another smaller regional insurance company, Erie Insurance, is looking at rate reductions in several states. Tennessee, Wisconsin, Illinois, Indiana, Pennsylvania, decreases for car insurance between 5 and 6%. And also Progressive, looking at rate decreases in Illinois, Indiana, New Hampshire, anywhere from 4.5% to 10%. Now, this could be due to pandemic-related things that they've seen in decreases in claim activity, profitability, things like that, wanting to be more competitive in those markets, trying to push other insurers. Or this could also be more planned as part of a multi-year approach, as I said, business plan to try to be aggressive in those markets. It really could be either or. But in other markets, we see some car insurance companies increasing rates. So nationwide, in Nebraska and Kansas, are looking to raise rates by 10%, almost 15% in Missouri, and Allstate filing rate increases about 7% in New York, 5% in Arizona. So kind of the purpose and point of this video is to show that this may not be pandemic related. Obviously, those refund checks and discounts earlier this year were most definitely corona pandemic related, with the stay-at-home orders and the decrease in drivings. Undeniably, insurance carriers saw savings there, but we also have to think that a lot of these companies do a lot more than just car and auto insurance. They could be involved on the commercial side, property, casualty, other types of insurance. So as a whole, we may see more losses in some areas, and the car insurance personal lines aspect of it could just be a small portion of it. And the other reason I bring up these rate changes all across the country is once again to remind everybody that the best thing you can do for yourself is to either get an independent agent who can look up different rates with different companies for you, see what's best for you, ask your agent about any discounts, or just go out yourself, since most of these things can be done online now in just a couple minutes. Comparing rates between companies from time to time can only help you. There's no downside to it. The worst, you'll find out that you're already getting the best rate that you can. But we see here with companies in some areas looking to decrease rates, companies in other areas increasing rates. It's really, really hard for anyone to try to compare rates. If I have a friend across the country in New York, I live in Oregon, they're paying this much, I'm paying this much, they're with different companies, different cars, different driving experiences. It's really hard to compare across individuals. It's really down to people like you in your area that you can really look at. And even then, things could differ depending on the car and other factors, right? So with some companies trying to be more aggressive to push their rates, to get customers and retain them, they're hoping that if they can provide you good service, a decent rate, you're going to be satisfied and not really pushed to change. But if you are seeing crazy increases or you don't feel like you got enough of a discount, this could be a great time to speak with an agent, to reevaluate your policies, do some shopping. Maybe another insurance carrier has filed for rate reductions that can be approved and you might see those apply to you. Another note, I think a lot of these rate reductions are generally speaking, it might not apply to your certain characteristics or what your background may be. So even if they filed for a general increase, you may still see some decreases or vice versa. With a lot of these things, there's a lot of moving pieces, a lot to really think about. But hey, we're living in interesting times, a lot of things that we haven't really seen before in the past. So it's good to try to keep an eye on this and think about how your insurance is doing. So if you thought this video was useful, hit that like button, give it a like. If you're not subscribed to the channel, consider doing so. Hit that subscribe button. It'll only take a second. But if you thought this video was useful, have any other questions, let me know down in the comment section below. Other than that, that's all I have for you today. Thanks for watching. Peace out.